I started my company 12 years ago, and the first 5 years I spent developing a 155 variable computer model. We've been running it now twice a week for the last 7 years, and as you will see on the second page of this presentation, there have been very few people on Wall Street that have been able to match our performance. It is a 155 variable computer model, but what separates what we do from others is that there's a very heavy fundamental and subjective overlay that's applied to the computer results. So we're able to separate the values from the value traps that hurt a lot of the quant funds that weren't adding the human element to the computer data as we do. The model works across all 10 sectors. We put out between 40 and 60 recommendations a year. We also put out sector reports, industry reports, and we are also able to do portfolio diagnostics where we get the client's holdings and focus lists and run those through our computer model on a standalone basis, or we are able to merge that list with the S&P 500 or the Russell 2000 or whatever your benchmark is. We put out 8 reports every month. You see the schedule for the next 3 months on the third page of the presentation. We currently have 68 open recommendations spread out across 10 sectors. We are right now ranked number 4 versus 191 funds and research firms in the country. And what you see on the 4th page is a profile for Western Digital that was generated when we ran the S&P 500 names through our model a few weeks ago. That is the profile that the computer generates for every stock that goes through the computer model. And then we manually investigate the orange and red areas and decide whether it's a deal breaker or not. We look at relative strength when it's at the extremes as a contrarian indicator. So the recommendations that are being generated are usually on names that are out of favor, where we see $3 of upside for every dollar of remaining downside risk. And that's what you get when you go into names that are trading with relative strength in the bottom quarter, as opposed to going into stocks that are trading in the top 10 or 15% on relative strength, where you might have another $1 of upside, but there's $3 of downside risk. We cover more than 2,000 stocks. We usually limit the names that go through our computer model to those with market caps of at least $200 million and a 3-year operating history, and we usually try to make sure the names are liquid and have a minimum share price of $5. We are a member of the Investor Side Research Association. They've certified us as having no conflicts of interest. We don't do investment banking. We don't trade. We've never taken money from a company that we wrote a report on. If you look at the 10 or 11-page report that I gave you on the retail industry, it's going to be hard for you to find the disclaimer on our reports because we have nothing to disclose. When you get a report from one of the big shops, the disclaimer is longer than the actual report. Our disclaimer is a half a page. We're usually the first ones to go into a name on Wall Street, and we're usually the first ones out. I don't upgrade names after they come out with good news, and I don't downgrade names after they come out with bad news. People pay me to step in front of those press releases that you see all the Wall Street firms jumping on after the fact.
The important thing, Syndex was formed 13 years ago. It's an independent consulting firm that has catered to the buy-side community. Fund of funds, family offices, hedge funds, traditional asset managers of all types. I'll give you a little overview of some of the projects that we've been working on currently and what we've done previously to give you a better idea of what we actually do. I'll tell you a little bit about our team, and then I'll tell you about what we don't do, so that kind of crystallizes where Syndex is in your environments. But Syndex was formed, as I said, 13 years ago. Michael Berger founded the firm after working with a $70 billion traditional asset manager. It was a total system pull out and an implementation of all new systems and processes. And the interesting thing about that was the accountants, the traders, the portfolio managers, the IR people, the chief operating officer, the IT, nobody had a clear understanding of the other side's business. So there was always a disconnect. And he said, you know what, there's a business in this. So what we've worked in, we go to these firms, we work through the silos, and we bring everything together and bring all the requirements in a multidisciplinary approach. So that was the genesis of Syndex. Since then, we've got 15 people now with an average of 17 years experience, and you'd be impressed by, if you met with some of these people, I get impressed by them, it's amazing. But they all come from a multidisciplinary approach. They're not just programmers, or trade settlement. They cover the whole thing, so they understand the business. Current projects that we're working on, we're at a $20 billion firm now. Built a proprietary database themselves, have to rip it out, bring it in for GIPS performance because you're going to go after a separate managed account. This account has ETFs, hedge funds, mutual funds, and a couple of separate accounts. We basically went in there and did an analysis with each of the departments within the firm, understood the requirements, brought it out, created a scorecard, and then we're able to bring the vendors in. We're going to be totally agnostic to the vendors in your situation. When you have a problem, we're not going to come in and just stick you with one system. It's totally agnostic. And we were able to help that manager make a decision on what they wanted to do. So that's the type of work we've done there. We're also in a multi-hundred billion dollar firm who's separating their businesses out into different lines. And we have teams in there. Again, they're talking to the different department heads, and they're running a project where they're dealing with the internal as well as other external resources and project managing that. And that's what we use the term APIC, Analyze, Plan, Implement, and Control. The analysis, you all understand that. It's go figure out what the problem is. Half the time, you know what the problem is already. You just need a solution to it. Implementing it, systems, you have a lot of current operations today. You need to supplement another system or change a system. We can make sure that everything you've built around the existing infrastructure will continue to work properly and to your benefits, and things of that nature. We also have, as Michael alluded to, a service called Hegemonic Solutions. We'll go in and help a manager start their business. From the day they decide that they think they want to do this, that's our ramp-up phase to startup, where we can actually go in and help managers on the first couple of days of trading, make sure their operations people know exactly what to do and follow all the right procedures and controls and documentation, because that will come through in the due diligence process I'll get to in a second. Then there's the step-up process. Managers have been out there for 12, 18 months, successful. They know they have to put more investment into the firm to step up to attract the next level of capital coming in. We can go and help right-size the technologies and more procedures there. So it's ramp up, start up, and then step up from a management. You get budgets, operations manuals, compliance manuals, HR manuals, procedures and policies in place, not to mention the technologies and systems involved. That's a lot that I just spoke about, and I appreciate you listening. So that's what Syndex does. I mean, we go in there and we help these managers solve their problems or make themselves more attractive to a market segment that they're trying to attract, because they know that their system needs to grow or get better at certain aspects. And we can go in and not interrupt the processes and the people that are already working within that firm, because it's a lot to do your job as well as go and change and implement a lot of other things in that area. So that's what Syndex does, and we've just done a survey in the Dodd-Frank thing. So we're doing a lot of different things in that respect. I'm just trying to think. Our client base is from the $1 million startup manager. We have several $10 billion plus hedge funds that we're dealing with, multi-strat, multi-prime broker, long, short, single prime broker needing to go to a multi-prime scenario. We understand all those scenarios to a degree. So I hope that gives you an understanding, a basis of what we do. It's a lot, but we have to talk and find out what exactly your issues are. And to that method, we right-size the problems, and we very specific in what we're going to do, and then we right-size the budget with you, and then perform, and then you have an easy way to measure our performance so that you're not getting that project creep that everybody's concerned about. Right? You sign up for 10 hours of consulting, and all of a sudden, we come in and we're like, well, it's 70 hours. That won't happen. We get it. So that's what Syndex Systems is about. I'll be here all evening, so thank you very much, and thank you, Michael.
Yeah, Maurice is actually one of our board members, again, audit accounting services. The guy's the best in the business.
I might not be the best at putting this thing on, So you'll forgive me if I screw it up. But here we go. We give you 5 words. Bayou, Petters, Madoff, and Dodd-Frank. And those 5 words have sort of created much greater emphasis on the role of what you need as hedge fund managers as it relates to your service providers. We're important. The audit firm is important. But just as important are the infrastructure. The infrastructure meaning your lawyer. The infrastructure meaning your administrator. The infrastructure meaning your prime broker. All these people, all these individuals play a significant role in the whole process. We're there maybe at the end. And our firm has grown in 5 years, 5-fold times in 5 years, because we just don't want to be the reporter of summarized financial information. We want to be there at the beginning to help enforce and tell you, you need a good attorney, you need a good administrator, because you have to remember we got these 5 lingering words out there. So we want you to be encouraged that when you use your audit firm, that they get involved in the process at the beginning. And this is something that we want to do, and this is something that we are doing continuously. I was actually on a phone with a client today, a potential new client, that are doing structured settlements. And for those that may or may not be familiar with it, but basically you're buying a settlement claim that agreed to by the court with an insurance company, and they're buying it out a little bit earlier, so this way the plaintiff, so to speak, or the defendant had gotten their money, so they don't have to wait the next 17 years of their life. And I said, this is all great, you're buying a portfolio. Who's watching this portfolio? And what is the integrity of the company that's watching the portfolio? And I said, we have to have that company audited, and that company needs an SSAE 116, which was the former SAS 70. So it's not just the firm, the audit of the company that we're looking at, but the manager really, really needs to know the integrity of their service providers. So this is some of the things that we like to do on the outset to guide you. My partner, Pam Rados, who is a line partner of the fund, she's the one that's going to be responsible for ensuring that financial statements are reported fairly. She's in charge of the audit process. I just hang out, look pretty, but I like to be there for my clients so that they can call me at any time so we can guide you through this process. I'm very pleased to see what a great turnout, and I'm very, very thankful for Mike and thankful for everyone else to give us a few moments. Thank you.
Thank you, Maurice.